The U.S. Federal Reserve kept its interest rates steady once again as inflation insists. Policymakers remain optimistic that 3 rate cuts will come by the end of the year, and stock markets surged in response. Our Moon Hye-ryeon reports.
U.S. Federal Reserve officials kept rates unchanged for the 5th consecutive time on Wednesday, following the second 2-day Federal Open Market Committee meeting this year. With this latest move, the benchmark interest rates in the U.S. continue to stand in the range of 5.25% to 5.5%. A fresh set of quarterly economic estimates has also been released, showing an elevated projection for inflation due to slower-than-expected progress towards the Fed's 2% target. The forecast says the personal consumption expenditures price index, excluding food and energy, will rise at a rate of 2.6% by the end of the year, compared to 2.4% projections issued in December. Fed Chair Jerome Powell expressed some concerns about the current economic conditions, such as a higher-than-expected consumer price index and PCE in January and February that led to the rate freeze.
Inflation has eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still too high.
There has been much speculation about when the Fed will begin interest rate cuts, with observers forecasting that they will come in the second half of the year. Following this latest meeting, policymakers forecast that 3 rate cuts will come by the end of the year, consistent with its earlier forecast and supported by Powell's comments.
We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
This outlook was met with enthusiasm from the stock market, with U.S. stocks closing at an all-time high. The benchmark S&P 500 gained 0.89% compared to the previous close, and the tech-heavy Nasdaq jumped by 1.25%. The Dow Jones Industrial Average rose by 1.03%. It's the first time since November 2021 that all 3 major indices have hit all-time closing records. Meanwhile, the key interest rate gap between South Korea and the U.S. remains at 2 percentage points after the Bank of Korea also froze its rates for the 9th consecutive meeting in February. Moon Hye-ryeon, Arirang News.